In this video, I'm going to show you how you can get started investing in the stock market with as little as $100. And I only use $100 for the title of this video. You can really start investing in the stock market with as little as $10, $5, and in some cases with as little as $1. The reason why I wanted to make this video because when I explain to people in real life of how to go about getting started investing in the stock market, one of their biggest fears is losing money. So they always want to start off with a really small amount of money. Whether it's $100 or $5, the process is actually really similar. So if we haven't met already, my name is Anfernee, and on this channel I talk about investing, side hustles, and personal finance, and I want to give you a detailed walkthrough on how to get started investing in the stock market with $100. So I know that I just talked about it briefly, but why start off with $100? You probably know that you won't get rich using $100, and I think that at the very beginning it has a lot to do with risk tolerance. So when you're starting out, one of the biggest fears is putting your money into something that you don't understand. And to a lot of people, the stock market could be similar to gambling, to where you're buying things that say they have a price, but you don't get anything in return, and the price changes over time, and you don't know why the price goes up and down. And I'll be the first to say that it makes sense when you don't know all of the back end data that goes into a stock price of why exactly 1 minute is worth $20 and the next second it could be worth $18. But as we mature in our investing and we calm down and our risk tolerance starts to get a little bit higher where we can handle more fluctuations, then we can start actually reaping the benefits of the stock market. And if you think that you cannot get started investing in a stock market with $100, then I'll be the first to say that you're wrong as well, because of this phenomenon called fractional shares. And I'm going to break down fractional shares in a little bit more detail in a second, but it basically allows you to own a small piece of a company that breaks the stock up into an amount that you can afford. But before you go into buying fractional shares, the first thing that you want to do is choose the right investing platform. And I say choose the right investing platform loosely because there's not necessarily any investing platform that's going to be more beneficial to the other in terms of your investment gains, but there will be investing platforms that you find more attractive to you, that you find more confidence in, and overall investing platforms that you feel comfortable putting your money into. For the younger generation, investing platforms like Robinhood, Webull, M1 Finance are really popular because they sort of gamify the area of investing. It makes investing look cooler, look funner, and not just boring numbers on a computer screen. But for the people who are more established in years, they tend to gravitate towards brokerage companies like Fidelity and Charles Schwab and the big known names in the industry. But I would say that when you're choosing your investing platform at the very beginning, regardless of appearance or how long the company's been founded, you want to look for a company that offers zero commission trading and also the ability to purchase fractional shares. Without these two bullet points at the very beginning, you will not get the full experience of investing in the stock market, especially if you have a very small amount of money. But now let's go back into the explanation of fractional shares that I promised you. So fractional shares, what are they? And in order to get to fractional shares, I kind of have to work from the top down. So when you're just getting started investing in the stock market, what you want to know first is what is a stock? And a stock is going to be a partial ownership right into a company. So one of the more popular companies that you may know on the stock market is Apple. Let's just say, for example, Apple only has 1,000 shares available. Now I know Apple has millions of shares available for the keyboard warriors out there, but let's just say in this particular example, Apple only has 1,000 shares available on the stock market. And if you were to buy one of those 1,000 available shares, you will become a 1/1000th owner of Apple, or you have a 1/1000th ownership right in Apple. And this doesn't mean that you can walk into Apple and start changing the rules, but it does mean that you get voting rights and rights to dividends that Apple chooses to pay. And with that 1/1000 share, if Apple had a total market value of $10,000, that means that your one share of the 1,000 for a $10,000 value company would be worth $10. And I'm not going to dive too deep into why this value fluctuates, just say that your share is worth $10. And if you have $10 in this example, you could buy one share, but let's say you only have $1. So if you only have $1, you would not be able to buy a whole share of Apple. So in that case, you would have to go to a brokerage company that allows fractional share buying. And for the brokerage company that allows fractional share buying, they would buy the shares up front and then let the users of their platform buy pieces of the shares they own and transfer the ownership rights that way. So if you only have $1 and you invested in Robinhood, Robinhood will allow you to buy 1/10 of the one share for $1 and you will own that partial share. And the performance of your $1 worth of stock would be the same as if you owned the $10 or if you owned the entire 1,000. Just the voting rights and the dividends that you receive would be prorated to the actual amount that you own. I know this can be a little bit complicated, but you buy little share because you want to spend little money. That's how it works. And then moving on, when you're just getting started with $100, it is going to be important to know that don't spend your whole $100 all on one stock. When you are getting started with $100, you want to pretend or you want to manifest that you already have the portfolio that you are striving to get. So if you want a $100,000, $10,000 portfolio, then go ahead and treat it like you already have $10,000 just with your $100. Diversify your investments. Invest in different areas. If you don't know what diversification does, it allows you to invest in different areas so all of your money is not just sitting in one place. If you had $1 million, you don't want to just put it on Apple, because if Apple fails, then so will your $1 million. So you want to invest in a broad variety of companies so that you insulate yourself from one market dragging your entire portfolio down. A great way to do this that I preach a lot on the channel is by investing in index funds. On the series where I built a $10,000 portfolio from scratch, I invested a majority of the money in the S&P 500 index fund, as well as a second most majority into international stock market index fund. I have a full, I think, 10-part series covering that, where I built that $10,000 portfolio by contributing $35 a day for, I think it was about 300 days. So it's a pretty good watch if you're interested in that. But at the same time, when you are diversifying your investments, this is going to be a great time to set your goals and be patient. You have to understand that you are not going to get rich on $100. So your expectations in this sense should be that you are going to be using this as a learning experience to know how the stock market works, to know what companies that you are familiar with that you can actually invest in and become a partial owner of, and also to increase your risk tolerance. Because even if you don't have the money right now, if you treat it like you already have it, once you do get the money, you may be more likely to put more money in the stock market instead of in a savings account. And obviously the benefit to investing versus savings is that you get to take advantage of the growth of the economy, you get to take advantage of compound interest, and that you get to insulate your money in a sense from inflation, because every single year your money is going to have less buying power if you just sit in a savings account, because unless it is a high yield savings account, the bank does not pay you nearly enough for it to be worth the same amount in buying power at the end of the year than it did at the beginning of the year. So as you set your goals, think about where you want to be in 5 years, 10 years, 20 years, and then once you have a clear picture or you have written down exactly what you want, the next step is going to be to invest regularly. I have never been a big fan of trying to time the market or trying to only invest when stocks are on sale. What I do is similar to millions of other investors, and that is going to be by dollar cost averaging. And all dollar cost averaging is when you invest a set amount of money every single month, regardless of if the prices are high or the prices are low, and you just invest consistently in the plan that you have placed. In my opinion, one of the perfect examples of dollar cost averaging was that series that I made of building a $10,000 Robinhood portfolio, because no matter if the price was high or low, I was still putting my money in the S&P 500 index fund, and the performance of that in just 1 year, although this is not typical of every year, was over 10%. So that means that I made over $1,000 just from investing my money in things that I understood, whereas if it was in a savings account, I would have lost buying power. But once you have all of these things, here are a couple of common mistakes that you really want to avoid when you're just getting started investing. And I have been a victim of all of these at some point, so I want to say these to you as someone who has experience and wants to help you not make the same mistakes. So when you're just getting started investing, you want to avoid checking your portfolio too often. You don't want to be looking at your screen every single second, stressing over if the number is going up or if the number is going down, because at the end of the day, that is not going to be of any value to your life whatsoever. Unless you are a day trader where you have to lock in profits very quick, or you have to be ready to pounce at any moment on a potential opportunity, there is going to be no need to check the second by second performance of a portfolio with a 10-year plan. Historically, the stock market has always gone down and up and down and up and down and up. But if you back up a little bit and you look at the bigger picture, consistently over time, even though there have been big dips, the stock market has risen in value over time. Now, there could be a period of time for a couple years where there's a recession or a depression, but in these times, you can look at it like your favorite stocks are on sale and you're getting them for a bigger discount, instead of that you need to panic sell and get out of the stock market entirely. And that's going to be the second common mistake that you should avoid when you're just getting started. With the stock market, it is very much going to be based on consumer behavior. So if you see a couple people selling and you sell as well, and then everyone else sells with you, that is going to drive the price of the stock down. However, when you see the other sheep selling all their stock and the price is going down, and you come in and swoop up all of those stocks at a cheaper value, and then once the dust settles, it starts to return to its true intrinsic value, you would have made much more money than the people who sold in a panic. So being patient in the stock market really does pay off in the long run, as you can see by the performance of many of the portfolios that I have built here on the channel. And with all that being said, if you found any kind of value in this video, I would really appreciate it if you tap that like button for your boy, as it does help the channel out and it does make me happy when I see that number go up. As well as if you want to see more content like this, then hit that subscribe button, as I would love to get this channel to 100,000 subscribers. And then I'll see you in the next video, guys.